Hey traders, and welcome to the Trading Channel. My name is Steven and I am the owner and head trader at thetradingchannel.net, an educational website that strives to help struggling and new traders become consistently and independently profitable. Now we've already managed to help hundreds of traders do this, go from blowing accounts to becoming consistently profitable, and you can see some of their testimonials scrolling up the screen now. The way we do this is by offering free educational content here on YouTube that includes strategies, tutorials on risk management, money management, and trading psychology. Along with the YouTube channel, we've also managed to help hundreds of traders become profitable through our training programs and courses that we offer on thetradingchannel.net. So I just wanted to take this first few moments of the video and invite you to click the link in the description of this video labeled EAP if you are a struggling trader or a new trader that wants to shave some time off of your learning curve. So what I'm going to do now is go ahead and let the intro and disclaimer roll. If you guys are interested in learning more about the training programs and courses that we offer at thetradingchannel.net, then just click the link in the description below this video labeled EAP. If not, then that's okay too. Just keep it locked here while the intro and disclaimer roll. Go ahead and hit that like button for me. Subscribe to the channel if you're new to be alerted when I come out with more free educational content here on YouTube, and I'll be right back to share with you guys some structure-based trades. Welcome back, traders. So today's video is Structure-Based Trading Episode 3, and as you may have guessed, I've already done Episodes 1 and 2 of Structure-Based Trading. Those links will be in the description below this video if you'd like to check those out. In this series of videos, I like to go through the market, through the major pairs, and search for what I consider major levels of structure, points in the market that I will be considering trading from. And when I say that, I mean points in the market where I'm going to be looking for an entry reason if the market reaches that level. And the reasoning behind that is because these levels that I point out during this series of structure-based trading are levels that the market has respected multiple times in the past. So we'll go ahead and dive right into today's video, starting with the Aussie yen. Now the Aussie yen is not one of the major pairs that I normally go over, but I thought it would be a very good example of how you can use this structure-based trading in order to make some big profits from the market on a higher time frame like the daily chart. As you can see here, this is some of the same exact analysis we do during our structure-based trading series, which is we look for previous points where the market has respected price action before, which would be here at this level. As you can see, 3 different times the market was supported from this level as we consolidated here in this little area. And if we zoom out even more, you can see where the market has respected this level multiple times in the past as resistance and support, pushing down just after rising above this level, pushing up once we hit it here as support. So for that reason, I was interested in a trading opportunity at this level. And as you can see, because of that analysis, I'm now sitting in a trade that's up over 329 pips, all based on the analysis that I'm teaching you guys throughout this structure-based trading series. So make sure that you're taking notes and practicing reading structure and pointing out these key levels for your own trading. Now, for the purpose of these videos, we look at these levels and we determine our entry by double tops and double bottoms. But in my personal trading, I actually use a few different entry reasons at these levels of major structure. And if you'd like to learn more about those entry reasons, they are included in the email analysis program. So if you'd like to learn more about that, again, link in the description. But as you can see, this market pushed below our major level that had been touched multiple times in the past. Directly after pushing below that level, we pushed right back up. And once we pushed up, I went ahead and dropped down to a lower time frame to find my entry right in this area, about halfway down that red engulfing candle there. Now, as you can see, this trade has now played out quite nicely. I think we're sitting at around a 4-to-1 risk reward on this specific trade. Let's check and see. We have a stop loss just above there. Yeah, we're sitting around a 4-to-1 risk reward on this specific trade. And what I'm going to do now, guys, is go ahead and go through the top 5 major pairs and point out structure levels that I believe something like this could happen from again. Now, this series is meant to help those of you who are struggling to point out major levels of structure, and also for more experienced traders that maybe don't have the time to look for the structure levels but have their own rules for an entry reason. If you fall under that category, then these videos would give you a good basis of the structure levels that you may want to trade around. I am going to begin doing this structure-based trading video every week on Sunday or Monday. So if you'd like to be, so if you're new to the channel, make sure you subscribe so that you're alerted each time one of those new videos come out. So let's go ahead and move on now to our next pair, which is going to be the Aussie dollar, one of our top 5 major pairs. And here on the Aussie dollar, what we're going to do is start out by pointing out our major levels of structure. Now, how are we going to identify those major levels? Well, we're looking for previous levels that the market has respected multiple times. Now, I already see the previous level of support that I'll be waiting for the market to come down to. As you can see, this market has started to drop. So the first thing I do is point out the level that it's most likely to come to. And this market is more than likely going to touch this level back here that's been touched multiple times before we see another rise or a breakout to the downside. So that's our first level of support that we're going to be looking at. Next, we have another level of support that's been tested multiple times. And guys, all I'm doing is looking for these levels that have been tested multiple times. As you can see, 2 touches there with a little bump off of resistance here. 1, 2, 3 touches here, giving us the second support level. Now we do the same exact thing for resistance. We go above price action. We look at the closest level to where price action is now, and we look for levels that have been tested multiple times. Now the major one that sticks out to me is right here. As you can see, that resistance level where my blue line is drawn has been touched at least 5 times there. So that's definitely a level that I will have my eye on if the market rallies and returns to that 0.7708 level. Or that area. It's not a specific level, it's not a specific line. I'm just looking for this area here to be tested eventually. And we may not get back up here for quite some time, but the main point of pointing out these key structure levels is to be prepared when the market does get to one of those levels. So another less far away level that I see that was tested multiple times would be right in here and right in there. So these 2 levels, this may be a little harder for some of you that are newer to reading structure to see. This level has been touched once, twice, 3 times, and for a 4th time here, which could be the reason that the market, as you can see, broke below that major level, pulled back into it just 1 candle later, and has since pushed down. You see these wicks that are above that level here. Those wicks indicate our selling pressure. So this level, being that strong level, could have caused this market to push back up and now be pushed down, and eventually cause this market to press against our level of support that we're looking for here. So these are the levels of structure that we'll be waiting on the market to reach on the Aussie dollar. And once we get there, you may be asking, how do we take advantage of this? And as I said, I have my own entry reasons that you can learn about if you're interested in being a part of some of the training programs, but you do not have to use the same exact entry reasons I do. The key point of this is having an entry reason that you can use at one of these key levels of structure. So having it at a key level of structure is already going to improve your odds greatly. Finding out the right entry reason is something that I'll leave up to you. But for the purpose of these videos, we do use double tops and double bottoms. So for the purpose of the video here today, what I'll be waiting to see is if the market comes down here, and then we can drop down to a lower time frame and see some kind of double bottom. And also I would like for that double bottom to give me a target that's bigger than a 1-to-1 up to our next resistance level. So if I get a double bottom here and I can put a stop loss below my double bottom, or any other entry reason that you get at this level, and a target here, then that will be just fine. I would just like to have at least a 1-to-1 back up to that major structure level. And again, guys, this is going to be on a lower time frame, so we'll be jumping down to either a 4-hour or hourly chart to look for that specific situation, or to look for our specific entry reasons. So to recap, the levels we'll be looking at here on the Aussie dollar are 0.732s, 0.745s for support, 0.759s, and 0.770s for resistance going into next week. Now we'll move along to our next major pair, which is going to be the euro dollar. And here on the euro dollar, we're actually involved in a trade based on that EAP analysis. This is a trade I sent out in email analysis earlier this morning that's currently going in our direction, but only by a few pips. We'll see how that works out by the end of the day. But for now, we'll go ahead and delete this and our structure line here. and we'll take a look at the major levels of structure out here on the daily chart, that if the market gets to those levels, we'll be looking for entries there. So first off, I'll look at my levels of support, just as we did previously on the Aussie dollar, and I see this is going to be a major level because we have multiple touches back here and multiple touches through here. So if this market drops down to this level, then I'll be waiting for an entry reason. And that's also giving me a little bit of a short bias because of where the market is now. So another thing you can look at is how close are we to these major levels, because they are kind of like a magnet for the market. So since we're here, I can assume that before this market has some kind of huge rally back up, this market will probably test our major level of structure support. So once you start understanding this structure-based analysis, it can be beneficial to more parts of your trading than you would think. So there's our first level of support I'll be looking at, and of course I'll be looking at this lowest level. Now, when it comes to these lowest, as this is here, and highest, as this is here, levels of structure, I do not need multiple touches on those levels. If there is a lowest level, then that level is already a major level, and if there is a highest level, then that level is a major level. So those are my two levels of support. Let's check out levels of resistance. So a major level would be here, where you can see the market has tested multiple times, and as I said earlier, this major level here at the top of our chart. Now, just as with the Aussie dollar, we'll be waiting on one of two things. Either this market will drop and eventually touch our major level of support, or this market will rise and eventually touch our major level of resistance. At that point, we'll be waiting on our specific entry reasons at those levels. And guys, a trading strategy can be as easy as that. And you don't even have to drop down time frames. That's something that does take a little more effort and a little more time to backtest. So if you wanted to base your entry reason on these major levels of structure, support, and resistance, and also have an entry reason that is on the daily chart, then you could absolutely do that as well. But pointing out these major levels of structure, support, and resistance that have been tested multiple times on a daily chart can really improve your chances of creating a successful trading strategy. Now, of course, there's a lot more to trading Forex or trading in any market than just the strategy. And if you're interested in what I'm talking about, then just type in the trading channel in your YouTube search bar and watch a few of my other videos, and you'll hear the word trading psychology and risk management talked about a lot. You can also learn more about that in the emailed analysis program by clicking the link below. Moving on to our next pair, it is going to be the dollar Swiss. Here on the dollar Swiss, we have a market that's previously broke and closed below a support level here. So we might expect that this market would continue lower, but where are we going to be looking for trading opportunities if we're going to continue lower? Well, the answer for me is at these major levels of support and resistance. Here you can see a major level of resistance. If I'll go ahead and point out the multiple times that this level was tested and respected as support or resistance, you can see why I decided to call this a major level. Now that's going to be one of our major levels of resistance, followed by this highest level here is what I see on the chart. And for support, we're actually back down at a previous level of major support, and then also our lowest level here. We'll go ahead and color these red for support, and our blue is our resistance lines. Now this is going to be a good situation. I'm actually going to be able to go ahead and show you guys down on a lower time frame exactly what we're looking for when the market breaks above or below one of these major levels. And guys, this is a major level because the market respected it here. It pushed off with this wick and then was respected as resistance and support down through there. That's the reason I've pointed this level out. So I just delete these, and we'll take a look at the 4 and 1 hour time frame to see what I'm talking about here on this. See this red level that was pierced, and I actually missed an entry here on this specific trade. This red level was our major level of resistance on our daily time frame, and the market broke past that, pulled down, and put in a nice long wicked candle showing us buying pressure from this level. Now when you start combining many different factors, that's when you can really start to improve your Forex trading strategy. So here we've combined not only the fact that the market pushed above and pulled back into a major level of structure out on the daily chart, but also we have a very nice candle formation showing us buying pressure with this long wick to the bottom side here on our 4 hour time frame. Now let's drop down to the hourly and see if we actually did get any kind of double bottom, which I doubt we did, but we'll zoom down and just check and see. We did, but it wasn't quite at our level, and the entry for this specific one probably would have been about right here with a stop loss below our previous level here, and let's see how many pips that was. Probably would have been about 20 pips below for our stop loss, which means our target. And again, guys, for the purpose of this video, we're looking at double tops and double bottoms for our entry reason at these major levels. So what I'm showing you here is that the market is pushed above this and we drop down to this hourly time frame. Once we drop down to the hourly time frame, the market pulled back down to that major level. The reason I just put these two boxes on here is one represents our stop loss, one represents our reward. The reason we're in that specific trade, or would be based on the rules that we're talking about today, is because we had one bottom, two bottom, which makes a double bottom here for our entry. So that's just another good example of how you can take advantage of these major levels of structure and use very simple techniques in order to enter the market at these levels. And guys, it's very important for you to understand that none of this is possible if you don't back test a system, or if you don't back test your specific entry reason at these levels, because you will have times that you win a lot, of course. You'll also have times that you lose, and if you have not back tested the system and gained confidence in it, then you're going to have a very hard time staying disciplined to any strategy without having that previous historical data tested to show you that even though you go through drawdowns, you can come out on top by the end of the year or by the end of 100 or 200 trades. So let's go ahead and move on to our next pair, which is going to be the pound dollar. And I'll go ahead and delete my boxes there. And here we'll go ahead and point out our major levels that we'll be looking for throughout the rest of this week and going into next week. If I bring out my horizontal line tool, I'll go ahead and draw out our support levels, which are going to be all the way down here. And as you can see, if I bring it across, that level's been tested multiple times. And our other support level would be somewhere in here. And the reason for that level is because the market tested it here as resistance and here as support. I don't necessarily love this level because it was only twice that it was tested and it wasn't pushed down very far this first time, but this is the best that we have on the pound dollar for support. So those two levels is what we'll be looking at to support the market if we fall down to one of those levels. And as for resistance, we're looking at this level here indicated in blue because of the multiple touches back in the past, and we can also see this level. Now on this specific chart, this is going to be a very big zone, or we can treat this as two different levels. I'll probably treat it as a zone, and this will be what it looks like. So if the market gets up to this zone anywhere and puts in one of the entry reasons, then that's when I'll decide whether or not I want to take a position on this trade. So that's it for the pound dollar, and to recap these levels, we're looking at 1.231s for support, 1.214s, and for resistance, we're looking at the 1.255 level and 1.265 to 1.273 zone for resistance. And I'm sorry I forgot to do the recap on the last pair, but we're going to go ahead and move on to the dollar yen and finish this video up. Here on the dollar yen, we have a previously back-tested strategy. So actually, I'm going to go ahead and change my chart. So here, let's go ahead and start pointing out our major levels of structure on the dollar yen, the last pair we're going to take a look at today. What I see so far for support, this market is dropping, so I'd like to point out the level that I expect it to stop at, and that would be somewhere around there. Until that point, we really don't have much to stop this market from falling. And after that, we could look at a level right here. And the reason for these two zones, guys, is multiple touches here and here for this first zone, multiple touches as support here and resistance here for our second area of support. Now, as for resistance, you probably can guess the levels that I'm going to be pointing out. At first, we're right here, guys, and this level has been tested 3 different times and respected 3 different times. So if this market does rally back before getting to one of those lower levels and touch this level, that's where we have the best chance of catching another move, in my opinion. Now, as for our second level of resistance, we'll be looking at the top of that area of consolidation as our second major level of resistance. And to recap our USD yen areas of support and resistance, we're looking at support at 106.7s and at 103.9s. We're looking at resistance at 111.9s and at 114.8s. So I hope this video helped you to better understand how to point out and read structure, and also some different ways you can take advantage once the market gets to those specific levels. Thank you so much if you made it through the entire video. If you enjoyed the video, make sure you click that like button for me. I'm really excited to announce that I'm in the process of forward testing a brand new strategy. I'm actually in the end of the process of forward testing a strategy that I will be uploading to the EAP members page. So this is a brand new strategy that I've never taught before, and I wanted to share this with you guys because I know a lot of you are already EAP members, and for those of you who are not EAP members and you'd like to learn about this strategy, you can still get in the EAP for a very low cost, and getting into that program already gives you access to all the strategies I use in my structure-based trading, all the entry reasons I use, along with the emailed analysis you'll be receiving 3 to 5 times a week of trades that I plan to take, and the email support as your mentor. So if you're interested in learning more about that new strategy, then make sure to try to get involved with that EAP program. To do that, click the link in the description below this video. Otherwise, I hope you guys enjoyed it. If you're new to the channel and you have not yet subscribed, go ahead and do that so you're alerted when I come out with free educational content here on YouTube. Comment below and let me know of any videos you'd like me to create on any other subject. I wish you guys the best of luck throughout the rest of your trading week, and I'll talk to you guys next time.
Like me, it drifts away. I would watch you stare. I would watch you stare. Oh, but there's no one there. We can figure this out. Put your feet down. We are the lucky ones. Swallow your choice, it's done. Terrified of what's left remains unsaid until you break my mind. Until you break my mind. Until you break my thought. Until you break my thought. I'm throwing wishes in the world in hopes that you will keep them for yourself, and know there was a time when we never let go, never let go. Ooh, we never let go. We can figure this out. Put your feet down. We are the lucky ones.